2 minutes of your prep time.
Okay. Some of you probably look for a job and can't find a job, and it sucks. But imagine if you have a child at home who's counting on you keeping the roof over your head, and you can't find a job, especially in today's economy. Right now, California, the most they pay is $450 a week. That is equal to about less than $25,000 a year. I know it wouldn't pay my mortgage, but it would help put food on the table and help out with some bills until I'm able to get up on my feet. I'm going to refute some of the claims that my opponent made. The first one, how by reducing the number of weeks that one can collect unemployment, how it reduces the unemployment rate. 2, how it would keep the businesses running because of the amount of money that the business would have to pay, and also how California needs to pay that money back, and I'm going to give other options as to how California can get that back. The first point that was made was the fact that giving people the choice to be on unemployment longer gives them the opportunity to accept unemployment longer, which basically means that people are lazy by nature. In the LA Times, at the week ending on April 6th, the Labor Department's weekly report showed that 380,000 new filings for jobless benefits last week was up from 13,000 from the week before. It was the second straight week of increased filings. And then on May 3rd, they reported that nearly 30% of jobless Americans have been out of work for at least a year, according to the Pew Fiscal Analysis Initiative report on the first quarter. And then on May 11th, more Americans than forecasted filed applications for unemployment benefits last week, a sign that the labor market is making little progress. The fact is that there are no jobs out there. These aren't people who are extending their claims. These are people who are filing for new claims. I don't think they're losing their job on purpose to go unemployed. They are filing brand new claims. Another point I'd like to point out is that the recession is what increases the unemployment rate, not the increased unemployment benefits. Unemployment rate is basically, the way they figure it is, it's the number of people who are accepting unemployment divided by the amount of people who are putting into it, or the money that's going into it. In a paper published by the Economic Policy Institute in November of last year, they stated that the unemployment rate in December of 2010 would have been about 0.3 percentage points higher if the unemployment insurance benefits had not been extended. The unemployment rate that month was 9.4%, up from 5% in December 2007, an increase of 4.4 percentage points. Thus, they find that a small fraction, 0.3 out of 4.4 of the increase in the unemployment rate during the Great Recession and its aftermath can be attributed to the unemployment benefits extensions. So it's the economy, it's not the extensions. Another thing that, back to her second point, the employers and the amount that they're paying. Currently, the employers need to pay back to they pay the federal government based on the first $7,000 that the employee earns. They are paying, due to a tax credit, the equivalent of $42 per year. Now, because they have to pay back for these government loans, their payments have increased 0.3%. That is equal to $21 more per employee. That's a year, only $21 per year. I don't think that is an actual reason to not extend benefits. And then on the third point, how California can pay back the federal government. There are other ways that they can pay back the government besides taxing the employers. For instance, Louisiana, what they did was they sold bonds to start repaying back their debt that they owe. The Louisiana State Treasury stated, the Treasurer, John Kennedy, the state of Louisiana went to market this week and sold $803 million in gasoline and fuels refunding tax revenue bonds, resulting in $100 million gross savings for taxpayers. It will save the state approximately $4.4 million per year over the next 23 years. And then also, Texas and Idaho also sold bonds, which saved them over $1 billion in taxes, and started to repay back the federal for their debt. So, in closing, the unemployment rate is due to the bad economy and the amount that the employers need to pay to cover their debt or the state's debt is inconsequential at this time, and there are other ways besides taxing the employers that California can pay back the government, the federal government.